Live from the Century 21 Showtime studio in LaSalle, Ontario. You're listening to the Nick and Joe Show, where we talk about the people, places, and faces of our community. It's showtime.
What a great intro. Welcome back, everybody, to the Nick and Joe podcast show. Welcome. We're excited to have you. I am your host, Nick Monteleone, and next to me, I have my co-host, my father, my dad, Joe, and also known as Monty. So today, we have our sponsor of Amazing Closets for an organized dream closet. Call Kevin today. Dad, introduce our guests. We got some important people in the house today. I'll let you give the intro into who we have in the room.
Absolutely. Thank you, everyone. Welcome to the show. I mean, these three people are absolutely famous in the mortgage business. And it's Joe, Bondy, and Sherry McTavish and Ron Bondy. Welcome to our show. Welcome to the Showtime podcast studio. We're excited to have you. We're going to take it easy on you, but we want to know where all the money's at, all right? And first of all, Joe, I know I called you Joe Bondy, but people recognize you as Superman. I mean, I didn't know if I should have introduced you as Superman or it's a disguise that you want to keep quiet, but...
We thanks for having us, first off. We really appreciate this opportunity. It's fabulous. And the super mortgage man kind of persona, if you will, came out from my business manager. Not my business manager, but my sales manager back a few years. And we won top 1% in the country. Wow. And coming from Windsor, that's quite the feat. That's when you consider our average mortgage is about a quarter of what Toronto and Vancouver is. So she said, yeah, you guys are like a super team, a super mortgage team. Well, and then we became...
And you rolled with it.
I rolled with it.
I like it.
There you go. We got Superman and super team in the house. But, Joe, as much as, we've done business for a while, you have to step aside because I've known Sherry longer than you. Okay, Sherry now, she comes with a lot of experience. She's been around this game for a long time, right, Sherry?
Very long time.
And so you have a great team. So I'm not going to give you all the credit of that.
Oh, no.
And of course, and this year you brought Mr. Ron Bondy. Ron, welcome here. I know you don't have a microphone in front of you, but listen, if you have to push Joe to the side and say something, don't be shy.
Thanks for having us.
But anyways, welcome everyone. Today, your business, our business, there's been so many changes in how we go about doing things, and maybe you can share what has really changed in the way you do business today in comparison to 6 months ago, 8 months ago. And whoever wants to take this and...
Yeah, so it's really become a virtual world for us. The bank has pretty much told us, unless it's absolutely necessary and the client doesn't have a cell phone, no more face-to-face. We want everything done computer to computer, and we do everything via WebEx. That's a secured online face-to-face app, similar to Zoom, but the security is way better. And with the bank, you want your security and your privacy protected. So that's what we do. I mean, I've seen 2 clients face-to-face in the last 6 months, and that was because, one person was disabled and could only get to the bank, and the other one absolutely had no technology. So, but the cool thing is it's a real time saver because we're mobile. We used to drive from branch to branch, Tim Hortons, coffee shop to coffee shop, or wherever the client wanted to meet us. And now we meet them in the comfort of their home without actually going into their home. They're more comfortable because they don't feel like they got to clean their place, and because their mortgage specialist is coming over and that. So we line up these face-to-face virtual meetings, and it's kind of like playing a video game,
Honestly, I like it. I mean, even for myself, I find I can be a lot more productive because I can end one meeting and start another instantaneously. without, like you said, the drive to, somebody else's location to, or wait for somebody to get to me. I mean, there's still an element of face-to-face business that we do conduct, and I do value that for sure. But the technology has definitely improved the speed at which we conduct business and how much we can get done in a day, right? So it's awesome. I mean, I think you're going to see people that are drivers of the industry really take off and maximize their potential because of that, which is great, right? So I mean, you guys are a well-oiled machine. Your team, you guys operate so well. So now you give yourselves a tool like this, you guys can skyrocket. Not that you haven't, you're already hitting top 1%, already as is. I can only imagine what you guys are going to achieve now. So,
but I just want to touch on that though. I know corporate America is changing their ways. They're saying productivity has increased, and as you've indicated, and so forth. And in that element, that's great. But also there's a concern that as these big corporations and banks and all that are asking their employees to work from home. I mean, there's going to be a lot of real estate, not only in the banking industry, vacancies and all that. We know, there's other corporations in the city that are asking their employees and their clerks and stuff to work at home as well. The second part, I believe that as important as technology is in our business, the human touch, the human connection is still so important. Technology is allowing us to work smarter or work easier, but we still need to have that one-to-one face-to-face. And the difficulty is, COVID's here. This is changing the way we're doing business. There's no more open houses, which is fine, because I believe the system today is better than just having a lot of people, and a lot of people show up and, that was a gong show. But it's changed for all of us, and to hear now, I did call you, I believe, and we did Zoom, which was great, Joe. You didn't have to meet me. I didn't have to meet you as much as we'd love to see each other, but you had those two twins in there, and you had to put me on pause because the babies were running around. So I love that. That was worth the Zoom call right there. Superman, and also
we're working through it.
Also, super dad as well. So, anyways, in our business, we have a lot of customers that are worried that their pre-qualification, as the bank has changed a lot of because of what's happened and so forth. Maybe you can touch on what you see happening right now and from the qualification and so forth.
Well, I think right now what we're doing too is we're taking a look at each application case by case. Everybody's situation is different, and the bank does recognize that. So we'll look at each one of our applications based on what's happening in their life, where they've been in the past few years with regards to income and employment, and where we think that they're headed. So it's not just a yes or no anymore. It's a let's peel the onion and look at everything about this particular client and see if what we're doing makes sense for the client. Our deferrals are done now. So at the beginning of October, the mortgage deferral program did effectively end, and we want to make sure that we're still in touch with those clients, making sure that they have the right advice to get them through the next phase as they either return to work or figure out what they need to do in order to make their house still work for them. So the bank is investing a lot of time and technology in making sure that we can still, yes, we are virtual with the clients, but we don't ever want to lose that personal connection with them because that is very important. This is a big part of a client's life. Owning a home, purchasing a property, refinancing. We're seeing a lot of clients now that are refinancing to make sure that, they wrap up all of their debt. We don't want them to be paying, credit cards and car loans, and let's wrap everything up to make their life easier. So the bank is really supporting us with the technology, making sure that we're not losing that personal connection with the clients. So that's been a great thing.
Wonderful. we've noticed also a trend. A lot of, it's free money today. It's great. It's the mortgage rates the mortgage rates are fantastic. It really does bring a lot of opportunities into home ownership today. But also, you see a lot more young people with $1 million homes and carrying astronomical mortgages today. Does that scare you a little, or does that scare the bank today of the situation?
I mean, the bank's always cautious. We never want to take a home away from somebody. That is the worst case scenario for us, the worst case scenario for the client. We always make sure that client stays in their home. Like our job, Sherry, Ron, and I, are to put families into home and keep them there. So we also make sure that they're properly insured with offering life, disability, critical illness, things that keep them in their homes, because that's what we want to do. Yes, the market is going up. In the Toronto area, it's like out of control. You need sometimes 2 incomes, sometimes 4 incomes, but we're seeing a lot of that. Families are buying houses together out there. So it's not just mother, father now, it's mother, father, son, and son's wife, or daughter and daughter's husband, and they're buying stuff out in the bigger markets. Or with what COVID showed us is we can do everything digitally. You don't have to live in the big smoke anymore. You can move to Windsor, do everything digitally. Absolutely. And you're feeling it, we're feeling it. We're seeing all kinds of immigration down to our affordable area where you get twice the house for half the price.
It's crazy.
Right?
Yeah.
So, we're making sure that everybody stays in their home. We're making sure that they have consistent income. For $300,000 difference in house price, you can take Porter Airlines to Toronto 5 times a week for the next 10 years and then retire. So you're in good shape.
Is the system different today than it was maybe, even 5 years ago? Is it more secured, would you say, or is there different things in place, safety nets in place, in anticipation of problems that have developed over the, obviously the past year?
We put in a special COVID protocol in lending. So depending on what industry you're in, and if you're business for self, we look at your income cash flows from a year ago compared to this year to make sure that you're still on track, you're still able to do your business properly. But we're open for business. We want to lend. We want to put families into homes, and
that's good. That's good policies. And you do have to be cautious today. Unfortunately, it's a reality of the times today, and an economy can collapse on bad banking habits. It happened in the U.S. We're very fortunate that the Canadian banking system has been so good, so solid, with rules and regulations, and that's why we've all celebrated success from real estate to banking and so forth. New homes, we of course that we do a lot of new home construction and all that. Has that changed today as well in any way, or is a continuation of the way it was 6 and 8 months ago, a year ago? Has lending changed with new home construction?
Lending really hasn't changed a whole lot for new home construction. We're still offering our long-term rate guarantees. We can hold rates for 12 months, 18 months, depending on the project. We do all of our due diligence up front, so we will order the appraisal up front. We will verify income up front, down payment. All of that is done before we issue our approval. So when that client in 12 months or 18 months goes to close on their purchase, nothing about our approval will change. Client will receive the best interest rate at the time. If rates have gone up, then we've got them locked into our long-term rate guarantee. So really nothing has changed. Our lending guidelines have not changed. We are, as Joe said, the banks have always been pretty cautious. We will never put somebody into a home that they can't afford. That's not what we do. So whether they're buying new construction or resale, our process really has not changed.
The builders look at RBC as top of mind when it comes to being represented by a lender or a bank, because of what you just said, is that come closing, there is, somewhat of a very good comfort knowing that the builders know that those buyers are going to close the deals, where there have been many instances where someone would come up and say, well, my bank is not going to, or my situation has changed and I can't afford to close this now, and so forth, where we've experienced in the past with RBC, we don't have hiccups, and we thank the bank and thank Team Bondy for representing us. But your reputation is not only with the realtors. Your reputation is truly of the demand of the builders, and a lot of times the builders will come up to us and say, no, we want RBC, or we want Team Bondy to represent us, because we know come closing, we're going to close these deals. And
it's just even one less thing that we have to worry about too, right? I mean, some people deal with whatever. I mean, different lenders, private lenders, whatever. And in a good day, it's whatever. It's not a problem. I mean, you get your mortgage and you'll get your house. But like he said, there's always the scenarios where things go wrong, or there's issues that pop up in life. And knowing that, we won't have to deal with that headache when dealing with, RBC is a huge aspect, and something that helps put our head on our pillow at night, knowing that we don't have to worry about it, right? So that's definitely a big benefit for our purchasers, and with their purchase, right? It's a big sense of security for not only for them, for us too. We don't want to see things go south. We don't want to see things pop up and have a troublesome road ahead of us, right? So it's nice knowing that there's that sense of security there for them.
Yeah.
Okay, guys, we're gonna take a couple minute break here, and we'll be back in just a few.
So what do you think so far? Do you love us? Want to hug us? Want to send us some money? Yeah, I didn't think so. You're listening to the Nick and Joe Show, and with some guy named Chuck. If you're listening to the show on Apple, Google Podcast, Spotify, iHeartRadio, or Tunein, you can watch and see our beautiful mugs on social media, Facebook, Instagram, YouTube, and our website, C21Showtime.ca. We hope you're having fun. We know we are. This is the Nick and Joe Show.
Welcome back, everyone, to the Nick and Joe Show. Again, I'm your host, Nick Monteleone. Next to me, I got Joe Monteleone, my host and my partner and my dad. And today's episode is sponsored by... who do we got today, Dad? We got Amazing Closets. For an amazing dream closet, call Kevin today. Kevin's a great guy. He'll take great care of you, so make sure you reach out and tell him that Nick and Joe sent you from Century 21. Dad, so here in the office, we got Joe Bondy and his team, Team Bondy from RBC. Why don't you kick off the first question? Actually, I think we're going to jump back into a little bit about the new home mortgage process. Yes. I think Joe wanted to mention something about that.
Absolutely. So. Before we do that, though, I want to shout out, of course, it was Melissa's birthday yesterday. So,
yes, it was.
Happy birthday to Melissa. I just wanted to,
you.
Joe, it's not always about you, okay?
That.
It's not always about you. And so a happy birthday to Melissa. But anyways, we had a good discussion. We just left before break of new homes. And Joe, you mentioned that you wanted to carry on that discussion. Please go ahead.
Yeah, so a little bit different from the way it was before is Tunein allows you to ask for up to $60,000 in deposits now. Before it used to be $40,000, I believe. So to get if the clients don't have $60,000 cash, how are they going to get it? Before we used to be able to offer them a line of credit and then finance and pay that off on closing to get them there. But when you get above $50,000 in a line of credit, you've got to have substantial income, substantial savings. So it makes it a little bit more difficult. So we vet the clients up front so that they don't sign a contract that they can't afford to do or put the deposits in. and we try to set them up for success right from the start. And sometimes it comes to negotiating with the builder, and the builder might say, yeah, okay, I'll take 50 grand on this deal instead of the 60 that they normally want. But we make sure that these clients are set up right up front. The other thing that they got to be careful of is their upgrades. Somebody wants to put gold leaf paint on the walls. That's a very expensive upgrade, but it doesn't really add value to the appraisal.
Correct.
So we got to make sure that at the end of the day, they have that security or safety net to be able to close the house. So we do all this vetting up front to make sure that these properties do close without a hiccup for yourselves.
So when somebody wants to buy, let's just say a new house will cost, I don't know, we'll say 550, well, just call it 600,000. And somebody comes to you and says, I want to buy a $600,000 home. Do you guys already kind of anticipate that there's going to be increased costs right off the bat for selections, for upgrades and all that? And how does that really work? Do you give them the maximum number approval that you can and tell them work within this price range, or do you expect a number up front of what it should cost total from start to finish?
I think we look at like a 10% cost overrun on most new builds. I mean, even the absolute best planner in the world goes over on a new build. Mm-hmm. They look at Houzz or Pinterest, and they have to have that granite countertop that came from wherever. All of a sudden the price went up $500. Well, that times 20 decisions, you got a $10,000 increase to your build price, right? Yeah. So we make sure that when they're building, they're pre-approved for a little bit more than what they're paying on the contract, because we fully anticipate them to be going over. Secondly, we have to make sure that it's kind of within that 10% range, so the appraisal still appraises out, because the banks will only finance the lesser of the purchase price or appraised value, right? So mm-hmm. if they, again, have $100,000 in upgrades on a $600,000 house, that may not appraise out. And if that's the case, they got to come out of pocket or have extra cash to make up that difference.
Is that common? Does that happen a lot, or?
No, usually
the appraisal
yourselves are good in keeping them in line, and you have your set of selections that keeps everything in line. So
when you're looking at appraised value of a new home, that new homes are sold by builders as a base package. Landscaping's not included, basements are not finished, and the amenities of fencing and patios and sod and so forth is incomplete. So what happens, do you take that in consideration, that once that is done, it's really the true value of what a home is worth? Because you're qualifying a person on the base price of a home. We have appraisers coming out and want to appraise a home, but 90% of the homes are just basically finished with nothing outside. So are there two values that are looked at? And then a second part of this question is, a lot of people want to finish that after, or the builders will not allow someone to put in their pool prior to closing. This has to happen after closing. So how does someone come back and say, we need more money now? So maybe you can explain these situations.
So basically, when it's appraised, the basic house on that piece of dirt. We don't add any value for rocks or trees or, the driveway, the fence, the deck. I mean, those are all extras. And the client knows that up front because we make them aware of it. That initial, say, line of credit that we set up to help them with their deposits might come into play in the future. As we finance the mortgage, they pay off that line of credit, then they borrow back to do all these other things. With the way the market's going in Windsor, where everything's on an uprise, they can do all these, say, renos or landscaping or beautifying the property, and then come back after the fact, because it'll be over a year away. In our market, a year could mean 20% price increase.
Absolutely.
We refinance them, pay off their line of credit, and now they know exactly how much they're going to be paying for their mortgage and so forth. Because, I mean, we can say with the landscaping, with this, with that, it's worth so much, but if they don't put in exactly what they said, if, you know, the budget becomes tight, the pool guy says, oh, you know, I'm so busy, your pool's costing an extra 10 grand. Like,
It's common.
It happens all the time.
Especially right now with everybody putting in pools. Yeah.
Well, I mean, and I think that's another reason why our market's so hot, is because with COVID and everybody staying home, they're going to beautify their house and, you know, live in the place they want to be, make it Puerto Vallarta, you know?
Yeah.
Because they can't go to Puerto Vallarta. So.
I like that.
So.
Yeah, and that's you know, one thing that I think builders are looking at more and more to a certain extent is, you know, doing some sort of package for the outside, because they realize people want, you know, some sort of landscaping. And I mean, a lot of builders also don't want to do it just because, I mean, there's no guarantees with, you know, are they going to water their grass properly, or is it going to be maintained? Is it going to die? Who's liable for that? But I mean, that's definitely a conversation that I find, you know, dealing, you know, we represent quite a few builders in this office, and that's a common question amongst purchasers is, you know, what can we do for the grass? What can we do for the driveway? I want to put the driveway on my mortgage. Well, you know, they don't want to pour the driveway too early, so you can't get it during construction. So that's definitely, you know, the battle, and that's I'm glad that we touched on that topic, because I think that helps clarify for buyers on how to handle it. And like you said, after a year, possibly if the, you know, the prices continue to increase, look at a refi, and now you're in a different position, right? So good.
As you also mentioned in the earlier discussion, we are seeing an influx of immigrants, either coming from different jurisdictions or parts of the country into our city. I do see a great growth pattern happening, but there's also a lot of immigrants coming from different countries. So a lot of them are buying homes, but yet they haven't, you know, had jobs here. Is there a certain percentage of down payment that you look at because someone's come overseas, maybe with a great substantial down payment, but you still look at it differently from a qualification?
Yeah, we definitely have programs for people that are coming in from other countries. We're doing a lot of people coming in from the US right now, coming here, looking for work. But typically what we will find is that we want to see a substantial down payment, so typically around 35% down. We will also look at what they did back in their country, where they're coming from. So we have a lot of engineers coming in from the US and from overseas. You know, they will bring us their certifications, and we will look at their prognosis for employment here in Canada. We do want them to have their permanent residency here, so we're vetting that client too up front to make sure that, yes, while they may not be employed at the time that they land in Canada, which typically they are not, the prospects for them for income are substantial, and those are the people that are coming in with a lot of cash. We're verifying where that cash is coming from. So yeah, we definitely have programs for people who are coming in. We also have a program for people who are coming in as new to Canada with less than 35% down. They are looked at a little bit differently. They do have to have employment, and they can be an insured mortgage. So our default insurers will look at those clients as well. And again, case by case, every situation is different, but we absolutely have programs for those people.
Yeah, and it's got to make sense. So, like, if you're an engineer who's working at GM in Detroit, and you're, you know, a new immigrant to Canada, you have your permanent residency card. If you only have 5% down, chances are we are going to finance that, because you have gainful employment, you are a professional, and it's a 20-minute commute, right? Mm-hmm. If you said, I'm working in Las Vegas, that's probably not going to fly, because, you know, you're not going to fly 5 hours each way every day to and from work. So.
Oh, it is Vegas. Maybe.
So,
might have to twist my arm, but, you know, I could always sell real estate out there.
That's it.
Anyways, we are happy to have a partnership with the Joe Bondy team. We just want to say thank you for continued support in the lending business. Our clients continue to remain happy. our builders always continue to remain happy as well. As we know, we don't miss a closing because of a banking situation or a lending situation. So compliments to all of you and continued success, as we know that it's a super team right now. I don't know what the next level of accolades that you're going to achieve, but I know that you're a dynamic team, and you keep growing and keep doing the right things, and keep zooming, I guess. And I know you have your Zoom meet with Joe and Giselle there, and I hope that continues on. But the reality is, we're all doing what we need to do today to communicate, keep in touch, and so forth. So on behalf of Century 21 Showtime Realty, our team Monty and Team Bondy, thumbs up. Let's continue, and hopefully you have success continually in 2021. I like the word 21 there. So, anyways.
Blackjack.
All right. Thank you, everyone. Thanks for being with us today, and have a great day. And until our next podcast, we don't know who it is yet. It'll be a surprise, but thank you again. Have a great day.
Thank you so much.
Thanks for having us.
If you'd like to be a guest on our show, email us at joe@c21showtime.ca.